Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shruti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. It's a brand new week and we are hoping for a lot of queries yet again. But before that, let's have a quick look what the markets are up to. So Cheryl, Cheer is back and the bulls are back on the Wall Street.
Absolutely, Cheer is back. Definitely, Shrishti, a very good morning to you, and was actually a very good morning coming in for the markets because we were only just 30 or 35 odd points away from the 25,000 mark coming in on the Nifty. We hit a brand new record high levels once again when we opened up for trade today. Now we are holding on to levels comfortably above the 24,900 mark when you talk about the Nifty index. Let's take a look at what Nifty Bank is doing. Actually, it's outperforming the benchmark indices by a margin today because you are seeing an up move of about 1.5% coming in for the Nifty Bank at the day's highest point. And there are a couple of stocks that are actually seeing good up move. Bandhan Bank for the case in point right now, locked in the upper circuit about 10% or so. So keep an eye out on Bandhan Bank. In fact, sorry, it's not locked in the upper circuit. The circuit is open, so it's 10.5% uptick coming in for Bandhan Bank. But let's talk about the other set of gainers then. You have L&T, SBI, Indus and Bank, ICICI Bank, BPCL among some set of gainers at this point in time. While on the flip side, the Cipla, Tata Consumers, Tech Mahindra, Titan as well as Power Grid that are under pressure in trade today. The advanced decline ratio as of now is very much tilted in the favor of the gainers. So for now, we are looking comfortable and we are hoping to sustain this momentum when it comes to the benchmark indices where it's actually trying to make its way to the day's highest point. Talking about the broader markets, they are also outperforming the benchmark indices with the mid-cap index now at the day's highest point. Small-cap index also holding on to gains of about 1.2% as we speak. And the other sectors that are actually seeing good strength is PSU Bank Index. Take a look at that index. Actually, 3.5% uptick coming in for PSU Bank Index. Once again, you have real estate that is seeing good gains. You also have the PSE sector with good gains. Mid-cap index is seeing good gains as well as metal as well. But FMCG index, that's the one that is pretty subdued in trade today. The FMCG index is down about 0.3%. You have the IT index, that's the top sectoral loser, along with Pharma index. So if you look at it, as of now, the defenses are taking pretty much easy in our trade today, while the banks in the PSU sector or PSU banks that are actually taking the lead in trade today. So that's the way how the markets are looking like at this point in time. We've got Ashish Maheshwari also joining us on the show. A very good morning to you, Ashish. And what's exactly happening in the PSU banking space? You've seen a sharp up move in all of those counters today. 3.5% up move coming in for the PSU bank space. What's your take on this sector when you compare it with the private banking place?
Yes, the valuations are attractive, not from 1 day or 2 days. I think for last 1 year, the valuations are quite attractive of PSU banks. Only thing is that Philip was not there because some or other factors just kept the price rise in the check. But I think the way numbers of PNB has come or like the Bank of Baroda, etc., good numbers. So this is a shot in the arm for PSU banks as such, and then maybe now SBI has also started taking lead. So only caution one need to exercise is that we need to go with the larger PSU banks instead of smaller PSU banks because it's still some issues are there or the numbers are not that good of a smaller PSU banks compared to large size PSU banks. So I'll suggest to remain with your PNBs or SBI or Bank of Baroda only in this sector.
The take coming in on the public banking sector. But with this, viewers, let's start taking all your stock related queries then. But before that, let us tell you how you can connect live with us. So it will be a WhatsApp number that is flashing on the top of your screen, will be flashing all throughout the show. Or you can also write to us on our social media pages, that is X as well as Facebook pages, and we'll try to take as many queries as possible. To guide us fundamentally today, we have Ashish Maheshwari, and technically we are being joined by Kunal Bothra to guide us on the technical front. A very good morning to both of you. And let me kickstart taking the first query. Then a lot of queries already started pouring in. And the first query that I have, Ashish, is coming in from a viewer named Satya. He wants to know amongst BHEL, BEL or BEML, which stock do you like at this point in time? Any of your top recommendations or any of your favorites among these three?
I'll go with BHEL only. Because in my view, the valuation of BEML as well as BEL are slightly stretched, but BHEL, because of that budget announcement for a smaller nuclear reactor, etc., is in more into demand, and I'm expecting there's still value embedded in BHEL at this price, and the stock is doing good also. So go with BHEL.
All right. There is a very long query actually coming from Mahadevan, who's writing to us from Bangalore. He has 200 shares of Asian Paints purchased at 2,712 rupees per share. He's keeping a close track on the back of the new competition in the paint segment as well. So he wants to know whether it's better to exit or hold on for another year. Also, he wants to know about HPCL. The buy price is 358x bonus. So is it good to hold HPCL for a period of 2 years? Both these questions are coming to you, Ashish. Once again, Asian Paints, how does it look to you given the fact that the competition has now increased in the paint segment? Not just the paint segment, but the competition has increased. Looks like you have Aditya Birla Group actually being the disruptor now in the jewelry space as well. But Asian Paints in particular, 2,712 is the buy price coming in from Mahadevan, as well as HPCL for the period of 2 years. The buy price is 358x bonus.
So I'll suggest Asian Paint is not a good bet now anymore because the kind of market share company used to enjoy in decorative paints. Now Birla Opus Paints will certainly eat some of its market share in that category. So the kind of secular growth which was there in performance of Asian Paint for so many years, now JSW, then Birla Opus Paint, etc., they are going to take some of the market share for sure. And this is the reason this stock is again underperforming in spite of the fact that crude is also crude prices and the raw material prices are under the check. But ultimately, there will be a price war. This is the reason I'm not advising Asian Paints to buy at this price point, and my suggestion will be you can exit from this stock. As far as PCL is concerned, again, as the crude prices are in 80 to 83 kind of range for quite some time, and there's not too much reduction in the prices of any fuel also. So these companies will continue to mint a lot of money. So my view is HPCL as well as BPCL both looks very promising post bonus.
All right, that's the take coming in on HPCL as well as BPCL. We're moving on to the next one, and the next query is coming from Bhardwaj and Kunal. Wants your take on GMDC. Can he go ahead and buy this counter at current market price? He's looking to hold it for the long term, maybe for the next 2 to 4 years.
Well, longer term wise, you may look to buy the stock, but then I think the best part about the charts for GMDC I think is now behind because the stock has moved from I think 30 rupees or 20 rupees to 500 plus point. I think that was a high for GMDC just 2 quarters back. Now the stock is just going through a time-wise consolidation, and I believe that it could probably get into this consolidation further over the next 6 months or so. So you may not expect any kind of a high-flying return on the stock in that kind of a time frame. But since you are holding on to it from a longer term play, there could be a chance as well as a stronger possibility that the stock may come back into a recovery phase and then cross those levels of 500 in the next 2 years. So the risk reward as well as if you're a long term investor, then I would suggest a buy.
All right, this next query, Kunal, is coming back to you from LRG Reddy, who's writing to us from Telangana. He wants to know about Jupiter Wagons. He has about 1,000 shares at a price of 700 and Paramount Communications, which I'm not sure if you track or no, but he has 10,000 shares at a price of 72 rupees per share. What's your take coming in on both of these counters? Technically, where should he, which of the stocks should he hold or look to exit?
See, I think Jupiter Wagons, the stock has done exceptionally well in the last 4-5 years from, I think, 2020 lows of single digit, I think 7 or 10 odd rupees towards a recent high of 740 for the stock. It's done almost 100x in that sense. So I am not sure what are the kind of immediate returns you are looking out for into the stock price, because after such a kind of a steep move, we expect the stocks to get into a time-wise as well as a price-wise consolidation. So best to try and buy the stock when it retraces back, comes back towards its long-term moving averages. That could be closer to 500, 550 mark for Jupiter Wagon. So maybe another 10% down from current levels is where you can look to start buying. Paramount I don't track, so I'll skip that.
All right, then one more query coming your way, Kunal, specifically because Veni wants to know that can he go ahead and buy in any of the shipbuilding stocks right now? Any of the top bets that you have in this particular sector?
So again, the view would remain the same that may not be the best time to buy the stocks, the shipbuilding's name, the likes of GRSE, Mazagon Dock, Cochin Shipyard, etc. So I think we'll have to wait out for maybe another 5% to 7% correction into these names. If these stocks come back, say in between to their 50 and their 200 moving averages, that could be a good starting point. But your position sizing, your timing matters quite significantly over here. So I would not suggest to hurry on and buy onto these names as of now because these stocks are significantly overbought in the long-term chart. So wait out for a phase of correction and only then look to buy.
All right, this one is coming for you, Ashish, from V. Ravi Chandran, who's writing to us from Chennai. He wants to know about Motilal Oswal Financials. He's saying the company is also in wealth management in addition to various other businesses. So he wants to know if it's advisable to invest in Motilal Oswal at the current levels for a long term of period of about 3 to 5 years. And if not, then which is the other company which is into wealth management that he can look to invest in?
Yeah, in my view, like if you're looking for focused wealth management company, then Novama Wealth is quite promising at this valuation. Stock has almost touched 52-week high today, and in my view, this will continue to do well because the kind of client base Novama Wealth is having, and along with the kind of profitability they are showing quarter over quarter, and the kind of AUM they are building up quarter over quarter. If anybody want to take a bet on focused wealth management firm, then Novama Wealth is my pick number one, and after that, 361 can be also bought.
All right, that's the take coming in on Motilal Oswal. But moving on, the next query that I have, Kunal, what's your take on Bharat Dynamics? This one is from Subramaniam, and he wants your take on Bharat Dynamics holding 25 shares from a price of 1741 rupees. Is that a hold or sell?
See, that's exactly the point which I was highlighting earlier, that buying these stocks at an elevated price, even though they are at the thick of momentum, may not be a great strategy. And now I think from 1740 odd levels, the stock has come towards 1440. So you've already seen a downside of more than 20% odd, approximately 15% from your purchase price. So I'm not sure whether buying more at current levels would be attractive strategy because these stocks are still starting on or in the mid stages of their corrective phases. There could be a possibility of these stocks going into at least a 5% to 10% further correction from current levels also. So I would probably suggest to wait out. If you're looking to average out, then I would probably suggest a level maybe 10% lower from current zone. So closer to 1250, 1300 mark would be a better zone to try and average out further.
All right, this next query that I have is coming in from Krishna Rajagopal. He's writing to us from Mumbai. He wants to know whether it's good time to invest in Siemens at the levels of 7,000 rupees per share and Indus Towers at the levels of around 450 rupees per share. Kunal, what's your take? Does it make sense to invest in Siemens as well as in Indus Towers right now? However, our viewer has not mentioned the time horizon that he's looking at, but from his past messages, what I'm getting to understand that he is a senior citizen.
So I think Siemens could be a better bet in that aspect. The stock seemingly has come back towards a minor mean reversion, not a major mean reversion at current levels. So I think at 7,000 levels, the recent high being 7,600 or 500 thereabouts, I believe that the stock has come back towards a slight attractive territory. So you can look to venture buying the stock at current levels. For Indus Star, the only concern for the stock is that the stock is very high beta and it's run up exceedingly high in the last 2 years. I remember I think tracking the stock when it was sub 200 and it's now 450 plus approximately. So which means that the stock has done exceptionally well. And because of that high beta nature, there would be points or zones in the market where you might get this stock at a 5%, 10% cheaper prices than the current prices for itself. So you'll have to wait out for those odd phases of sudden correction for the stock price. Buying this closer to 400 could be a better strategy.
All right, that's the take coming in on Indus Stars. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now. While on the one hand you have the Indian market soaring to fresh record high levels, you have on the other hand the currency actually taking a dip. You have the rupee that has once again hit a fresh record low versus the dollar. Remember that over the last few trading sessions we've been seeing that phenomena where you have the rupee weakening against the dollar. So there you go today as well. I think it's hit a fresh record low against the dollar. But let's move on and let's continue taking your queries then. And this next one is coming in from Jagdish MN, who's writing to us from Bangalore, and he wants to know whether he should continue to hold on to Bharat Dynamics and Canara Bank. He wants to, I believe, Kunal, with his query, the way he's written, looks like he's suffering a loss in both of these counters. So now he wants to know whether he should stay put in these counters or look to exit and buy some other stocks to offset the loss.
Canara Bank as well as?
Bharat Dynamics.
So, see, I think for Canara Bank, I would suggest in fact an average at current levels, because my sense is that the PSU banking stocks are making a very strong comeback and they are trying to end almost a 5-week or a 7-week kind of a underperformance for themselves. So there was a point where the PSU banking index was down 8% to 9% in the last 2 months or so. So I think that covering up of the underperformance is now on the way, which means that the indices would at least come at par, and if the markets hold on to themselves, then we may see these indices also coming back into a breakout mode, breaking past for the previous high. So I think that context, buying or adding to Canara Bank could turn out to be a good strategy. For Bharat Dynamics, as I mentioned earlier, that if you've bought at higher levels, then I think at current zone, all you can do is just hold on to the stock, but then be ready for the stock getting into a further corrective phase, because as I mentioned earlier, that many of the defense stocks etc. These stocks are going through our individual correction, which could probably last for another 5% to 10% odd, depending on the beta of the stock prices. So Bharat Dynamics also could be a stock in that category. So if you're looking to average, I would suggest maybe another 5% to 7% lower from current levels is where you can look to start averaging for BDL, but Canara Bank you can average at current zones.
All right, moving on to the next one. And Ashish, the next query is coming from Mahesh. He's a senior citizen and wants to know, can he go ahead and buy Mayur Uniquoters at current market price with a 1 to 2 years investment horizon?
Yeah, as far as Mayur Unicorns is concerned, again, a good quality small cap stock, and has given very good return in last 1 year also. The stock is at 52-week high, but almost at 52-week high level. But I think the way the company has done capex in the last couple of years, now results have started coming in for this company. And I'm expecting this year also they will do 120 crore plus kind of profit. So still, stock is undervalued, and my suggestion will be investors can surely add at this price.
All right, this one is coming in from a viewer who's written to us for the first time. It's from Vishwanathan, who's writing to us from Tamil Nadu. And he wants to know about Midhani. Kunal, he has 100 shares of Midhani. He's purchased at levels of 87 rupees per share. He wants to know whether he can continue to stay put with Midhani in his portfolio.
Well, I would suggest again a similar strategy over here. You can keep this as part of your portfolio. The only good part about the charts for Midhani is that the stock is not extremely overbought on the weekly, monthly, quarterly time frame. So I think in that context, the stock may get into maybe a time-wise correction rather than a major price-wise correction. So I think closer to 450 is where you can look to even average further for Midhani.
All right, then moving on to the next one. And Ashish, this query is from Murli, and his query is, can he go ahead and buy Sudarshan Chemicals, considering that Sudarshan Chemicals, all in all, he did share his rationale. But what's your take on this particular counter, one of the chemical players?
This is again a good quality mid cap chemical stock, and we have seen excellent set of numbers also in the last quarter from Sudarshan Chemical. Almost net profit went up by almost 400% from previous quarter. And in my view, this is again a company which can report around 200 crore kind of profit this year, and doing very well. So my suggestion will be to surely to look at this stock from long term perspective.
All right, this next query that I have is coming in from a viewer, Padma, who wants to know about BSE. Protein or CAMS, wants to buy them at the current levels. And our viewer is a senior citizen, Kunal. Given the fact that she's talking about BSE, Protein, eGov, also for the matter of fact CAMS, they're all interlinked to how the stock market is performing, isn't it? So out of these three, which one do you think is the best stock to buy?
So protein eGov is something which I don't track, so I'll skip that one. But BSC is something which I do track, very closely. So I'll speak on that. And I think at current levels, the stock has come back to a very attractive territory. Now, what was happening is earlier when BSC was moving up towards, I think 3,000, 3,200 kind of a zone, the stock was hugely overbought. In fact, there was a point when the stock was almost 80% above its 200-day moving average. So from 1800 levels where the 200 EMA was for BSE at that time, the stock was at 3000 plus levels. There was a huge gap which was there in terms of the mean reversion. Now that gap is filled, the stock has come back towards its 200 DMA, which is currently placed at 2380, 2400 for the stock. So that mean reversion phase getting completed is a very good sign that the excesses into the stock is out, and now it's come back towards a good neutral territory. So you can start buying at current levels, but be ready, for the stock maybe going through that final phase of correction, maybe a 5%, 10% further correction, but that would be a very good point where you should look to buy if you're a long-term investor.
All right, Kunal, once again coming to you because this query is coming in from Hemant. He's writing to us from Hyderabad and he wants your take on two counters. Firstly is WPIL. He entered around 373 rupees. Is this a good time to book out some profits out here or continue to hold on? And he also wants an advice on VST tillers. It is a slow moving, good to hold or rotate into any other rural related themes. What will be your advice?
So WPL I don't track very closely, but then just looking at the charts preliminary, I think it's a stock which you can continue to hold on. So far I think trading at 500 plus levels, and recently the stock seems to be coming back into its own sort of a trend, at least on a better side. But I don't track it very closely. So at least as of now, looking at the preliminary chart, I would suggest a hold. But VST tillers is something which is actually shaping up very well on the long term basis. So yes, it's a low beta name, but I'm assuming if it's a part of your entire portfolio construct, and I think at current levels of VST tillers also, I think it could be a good strategy where you may look to even add further if you're a long-term investor. The charts are looking quite attractive and the stock is positioned quite well in terms of a major longer-term breakout.
All right, this one is coming from Amit. He's writing to us from Mumbai. He wants an advisor, Ajanta Pharma. He's already purchased purchased the shares at 700 rupees per share. He wants to know whether he should accumulate more or look to exit at current levels. Also, he wants to know whether he can look to buy Geo-Financials at current levels. What's your take on this one, Ashish? Ajanta Pharma purchased from 700 rupees per share. Do you think it makes sense for him to add some more at these levels? He's already making hefty set of profits, as well as Geo-Financial. What should he do?
Yeah, as far as investor is concerned, it appears that he's long-term investors and he's holding Ajanta Pharma for quite some time. But still, I'll advise that you remain invested in Ajanta Pharma because the kind of steady numbers this company is coming every quarter, I think this kind of a stock will always remain in demand. And this is the reason the stock is near 52-week high also. So my suggestion will be to remain invested in. As far as Geo-Financial is concerned, I'm not that bullish as far as Geo-Financial short to medium terms are concerned. In my view, NBFC's stock will continue to face some pressure, and we have seen Geo-Financial Services stock also not going anywhere in last few months. So it's a void in my view.
All right then, moving on, and Kunal, the next query is coming from Tushar and he wants to know that amongst the oil and gas space, any of your top recommendations at this point where he can go ahead and make a fresh buy?
I think ONGC is one of the best names if you're asking about the entire oil and gas energy space as such. And I think at current levels also 337, even though the stock is at a multi-year high, in fact if it's a lifetime high also for ONGC, I would still believe that it's a good level where you can look to add further. My sense is that the stock over the next 6 months or so should probably head towards 400, 420 mark as well. So I think looking at the steadiness of momentum, the V-shaped recovery the stock tends to show every now and then. So I think on the basis of that and the volume patterns, I would probably believe 400 plus could be a decent target for the stock. So I think if you have a time frame of 6 months to 9 months plus, then I would recommend this one.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, more stocks queries to be taken on the other side. Don't go anywhere.
Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries then. Just on the top of your screen that you can see, the Nifty is just at a kissing distance away from that 25,000 mark. So let's see whether it hits it today or not. But getting back to your queries then, and Kunal, the next query that I have is coming for you from Srinath, writing to us from Hyderabad. Wants your advice on Piramal Enterprise. He's been holding this for last 2 years. Buy price is 1081. What is the likely upside in this particular stock, and what to do next?
So I've been tracking the stock over the last couple of years, and I think it's an exceptional chart. And I would probably believe that the stock has finally managed to turn around itself. It's completing a lot many bullish formations, and one of the better formations the stock is showing on the monthly chart is a potential double bottom formation. And if that happens, and if the stock breaks past about this double bottom formation, or if it completes this pattern, then we could be looking at a potential 300 to 400 points further upside into the stock price. So from that 1200 levels, we are looking at a potential 1600 plus kind of a target for Piramal Enterprise. So very bullish on the stock. But you'll have to wait out for that breakout point as a confirmation of 1200 levels if you're a medium term investor.
All right, this one's coming from Richie. He's writing to us from Andhra Pradesh. He wants to know about SBI. Kunal, at what price should he buy SBI for a short-term gain of about 10 to 15%?
So I think current levels are good enough because the stock is not providing any kind of a major correction. So I think something which came by last week, where the stock retraced back towards its 50-day moving average, came towards a test of 840, 850 mark. So I think as an ideal price, 850 could be a better level if you're looking to buy, SBI. The good part is that the PSU banking stocks are heading towards a very strong coherent move, which means that this could be the next sector which could provide that additional bit of momentum of 5% odd over the next 3 to 5 days. So I think in that context, buying SBI could be a better bet. 850 could be a better price if you are looking to venture into the stock.
All right. The next query that I have, Ashish, let me take it from you. Vidya from Bangalore wants to know that amongst IFCI, Suzlon or Infibeam Avenues, amongst these three names, do you like any of the stocks for a fresh buy right here? He wants to stay invested for the next 3 to 4 years.
I think Suzlon hold maximum merit out of these stocks. And we have seen excellent set of numbers also from Suzlon in the last quarter. And then maybe this momentum will continue because now company is not having debt, and the way traction is happening in renewals. I think in wind power, not too many companies are there, and where Suzlon is market leader also. So better to stay with Suzlon. Maybe 60 rupees is a good price point to enter.
Kunal, this one is coming from Sunny. He's writing to us from Goa, and he's mentioned special thanks to Kunal for recommending Ethos a year ago. It's 2x for me now, is what he's saying. So big thank you to you on that particular note from Sunny, Kunal. And the other one is on Anthony Waste. Now his average price, buy price is about 300 rupees per share. He's saying he's booked partial profits at 900. Now, if he wants to add some more position, what would be the best price for it?
Thank you so much for that on Ethos. And for Anthony Waste, I think current levels could be a good zone where you can look to start buying, because the stock seems to be coming back into a corrective consolidative phase after a very steep recovery the stock had shown in the last few weeks. So I think buying at current levels could be a better strategy as well. I'm not sure whether the stock will provide an immediate kind of a correction, but just keeps a powder dry in case if it comes back to say 750, 740 kind of a range, which could be a 10% correction from current levels. Look to add further.
All right, moving on to the next query, and the next query that I have, Ashish, is coming in from a viewer. He didn't share his name. Okay, her name is Namita, and what will be your advice on MMTC, because she's already holding 400 shares, her buy price is 94 rupees. Is that a hold or sell in this particular stock?
See, we saw a wild moment in MMTC price when the gold duty for import came down in the budget. After that, the stock is now consolidating in that territory because that event is over. So my suggestion will be to book gains once in MMTC. I'm not expecting too much return from MMTC from this price point. Instead of this, I think other PSU stocks like IRIDA or PFCREC, they hold more potential to go up.
Just 16 points away from that 25,000 mark. And Kunal, let me see that smile on your face, because I know the first time I heard 25,000 on the Nifty was from you, because I know you had set a target towards the election time frame. No doubt we markets went into some sort of a consolidated phase, mild bit of correction. Nevertheless, 25,000, I think today here it comes.
Absolutely, yes, Cheryl. And I think we predicted this almost 8, 9 months back in November. I think post Diwali 2023 is where we had anticipated the Nifty to hit 25,000 mark. And I think we're just 10, 15 points away from this level. And I think it's victory for bulls throughout the last 8, 9 months and so.
Absolutely, victory for the Bulls. And do you think this victory will continue now, since 25,000 is here? That was your near-term target, 13 points away actually. What's your next set of target that one should look out for, and what sort of resistance and support that one should watch out for when you talk about Nifty, because 11 points away?
So now, what matters is that the narrative has changed dramatically. So over the last 12 months back, it was more of India outperformance. Now we have the global markets which have started to look very strong. So this would probably give our bull run a more of a mature phase kind of a bull run over the next 6 months to 12 months. I definitely see more upside for our indices, and if I can probably place a target, I would probably look at 27,500 for the index over the next 12 to 18 months.
All right, all right. That's the next target coming in for Nifty 50, 27,500, and we are just some points, like just 6 points away from that 25,000 marks. But quickly, Ashish, if you can also help us with your take, that since we are going to touch that level of 25,000, which sectors look attractive to you, or with this bull run all charged up, which sectors could lead the rally ahead?
I think now time has come to look at the stocks like your SBIs or L&Ts and frontline pharma companies, which will drive this market to new highs. And so PSU banks, defense, and pharma, I think my vote will go to these three sectors.
That's the take coming in from Ashish as well. And Kunal, I'm going to request Shreyansi, my producer, to record this particular clip of yours, because you've given 27,500 as your next target, and that is in the next 12 to 18 months. But now, from here on, which sectors do you think will lend the support, given that we are now just 3 points away, or less than 3 points, or less than 4 points away from that 25,000 on the Nifty?
So I think the hallmark of this rally, Cheryl, has been an all-round performance from various sectors. Now, whether you look at it as a building block, the starting of PSU names, defense, railways, the energy stocks doing exceptionally well, towards a point where now the markets are not too much dependent on these PSU names, and you have private sector stocks which have made a very strong comeback. So I believe that potentially the next 2,000, 2,500 points rally for the index should be led by more on the private sector names, and I would probably believe that the private sector banking stocks, the financial services name, they would make a very strong comeback. And historically, when we've back tested the trends for bull markets, it's the financial services name and the bank Nifty which tends to have a higher degree of outperformance for themselves. Add to that fact that the IT stocks are also another pocket which looks fairly attractive. So I believe an all-round performance, but more tilt towards the private sector names is where I would probably prefer over the next 2,000 points.
All right, that's the take coming in on Nifty 50, but it's not just the Nifty 50 that is scaling to new record high, but it's the few coming in from the banking index as well, because now if you can see, the Nifty Bank is also up around 900 points more than that, and it's SBI, ICICI Bank, Indus Bank, these are the top 3 gainers in Nifty 50. So the push from the banking space is also there. But Ashish, since you talked about the sectors, but if you can help our viewers with any of your top recommendations at this point in time, because it's not just the broader markets that are doing pretty well, but the large caps also participating in full energy.
Yes. So here's 2, 3 my picks which can outperform further. Is the first my pick is Dixon Technologies at 11,500 rupees. After some correction, this stock look very promising. Then Ultratech Cement is another stock which should be kept on your radar. I think we'll soon see 12,000 plus mark in Ultratech once this India Cement acquisition, things are getting as per the schedule. And third stock I like is again in power sector, PFC, REC. These twins stock will also continue to go well. And the last is SBI. In my view, now time is coming that SBI should be at least 1,000 rupees in near future.
Let me just recap, Ashish. You said Ultratech looks good, PFC, REC looks good, SBI looks good. I missed one fourth name of which you mentioned actually.
Dixon Technologies.
Dixon Technology. So these are the stocks that actually Ashish will keep on his radar. Kunal is of the view the next 2,000 point rally for the markets or for the Nifty will at least come from the private players or private sector players who will actually participate. Remember, the most part of this rally in the markets has been actually all thanks to what the PSU banking names have been doing or PSU names have been doing. And we have also Ajay standing by. And Ajay, 10 points only left for that 25,000 mark for the Nifty, historic feat. And so glad we all can actually watch it happen right in front of us, isn't it?
Well, that's correct. What a wonderful, ring it has, 25 Nifty at 25,000. And we are almost there, 6.5 points away. We'll get a battery of guests. But it's important to see what are the factors which are driving the market. Because, the two of the most difficult phases of the market recently got overtaken by the market sentiment. One was the election result. Let's be honest, it was not what the street was actually estimating, and the street adjusted to it and moved on. Globally, there's a change of narrative. The second point, that the rate cuts could be nearer, than further. Remember, the can was kicked down the road, and people were expecting maybe one rate cut in US this year, and then following. All of them got preponed looking at the PCE data. So global liquidity is back. On Friday, the big move which came on Friday, there was 14,000 crore of FI activity put together in FNO as well as in cash. So you have a situation where you have to think hard, to find any negative, kind of factors in the market. All of that is actually helping the market. FIs have come back, strong domestic liquidity environment, despite of so many QIPs, so many regular interval IPOs coming in, share sales, block deals, market is smoothly climbing the wall of worry, and now we are at 25K. And let's be honest that even the result season, which was expected to be slightly on the softer side, has not really turned out to be a big howler. There are patches of disappointments here and there, but net, the results have been pretty okay. So then what is the reason that you sell big time and put the cash on the side? Where would we deploy that cash? And that is what market is grappling in. There is a lot of missed out feeling, and that investors sitting on the fence on the sides are now coming into the market. And 24,994 is where we are at right now. Look at the journey of the market. We have some data points lined up. 3.5 points away. That is what Nifty is for you. And it has really Indian markets have actually confounded and kind of very mixed feelings coming in. It has surprised the naysayers as well as the guys who have been bullish. Because the naysayers were expecting a crash, it is not coming down. The bullish guys were, not to till this extent. After a 2-3 point rally, there's further rally. It is clearly a very interesting market we are in, Cheryl.
Absolutely, Ajay. Actually, the way you said it, it's this sort of a pace of the rally or the way how the markets have been moving have been surprising everybody, be it the naysayers, be it the one who are actually thumping the table and saying, yes, there's no stopping for this market. But Kunal, you did speak about how you expect the next 2,000 point rally coming in. Just for Ajay's benefit, Kunal is of the view that now if once we scale past the 25,000 mark, next 12 to 18 months, he is expecting 27,500 on the Nifty. So Kunal, which are the stocks that one can look at? You definitely outrightly said is the private sector players now that will chip in the next leg of the rally, isn't it?
Well, yes, and I think in that context, the likes of Reliance should start to outperform quite well. I would probably believe that the stock from 3,000 odd levels where it's trading right now, I think should be one of the major leaders in terms of the price performance. You may probably see a major revival coming into the private sector banking names, and I think in that context, the likes of HDFC Bank, ICICI Bank, they could probably play a very big role in the potential the next 2,000 odd points rally. IT stocks, and I strongly believe that many of these large cap IT names, Infi, TCS, etc., these stocks are showing very big breakouts for themselves more on the quarterly charts. That's why I would probably believe that the next leg of rally should be led by many of these large cap front and especially more tilted towards the private sector names.
All right, so next leg of rally from these large cap front, especially the private sector names as well. Ashish, if we still have you with us, then what's your take coming in on especially the defensive plays? What's your take on that? Because today they are taking it a bit easy. Everyone thought maybe the tide may be turning for the pharma and the IT sector, but do you think that tide is set to turn already?
Yes, I think tide has turned already in favor of these two sectors, and they will continue to do well. See, in US markets also, we have seen big turnaround, not only in Dow, but in Nasdaq also. So if Nasdaq will also start performing, how can our IT sector will not perform as such? So there's a reason. First, we have seen that picks like Infosys to TCS, etc., Tech Mahindra, etc., they have started moving. And again, if more purchasing power will be in hand of US retail, then you are going to see pharma exports also picking up to US market. So this is the reason we have seen your Orvindos and FDCs and Gland Pharma, etc., are also all now
Yeah.
moving
Yeah,
higher.
certainly,
So
Ashish.
this
We
sector,
got your take on the defensive pack as well and some of your top recommendations. We are just waiting by for Nifty 50 to hit that 25,000 mark. But it's testing the patience a little bit. But indeed, we are slipping into a very short break. Viewers, don't go anywhere. All eyes on Nifty 50, but we'll be right back.
If you like this video, then like, share and subscribe to ET Now.